Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and prepare for the changing of the economic guard. So we're going to be talking about, is this the potential death of the US dollar or the petrodollar as we know it today? So I've been talking about the petrodollar on this channel for a long time. I've been studying it since basically I was in college. And then what we have are the BRICs, which formed basically my sophomore year. This was in 2009. So if you guys haven't been following this, I highly suggest you pay attention and watch this video until the end. Yes, it'll probably be a little bit longer, but this is stuff that could affect our economy for many generations to come. So this is going to be titled a little bit inflammatory. It's obviously not going to be the death of the dollar, but what I mean more by this is the BRIC countries, so your Brazils, Russias, Indias, Chinas, South Africas, Saudi Arabias, Pakistan, for example, and the PetroYuan versus the US dollar. So what this is going to be is basically just a quick overview of what the BRIC countries are, and then also what's happening, why they're starting to get off the dollar more and more. So this is the BRIC countries. So this includes Brazil, Russia, India, China, and South Africa. This was an alliance that was started in 2009 and represents 4 of the world's 10 most populous countries and 4 of the 15 biggest economies. So the BRICs are responsible for 31.5% of global GDP. If you don't know what GDP is, that just means gross domestic product. It's basically the sum and total of all of your country's economic output. So basically all goods and services combined, what do you produce, what do you export, that kind of a thing. So 31.5% of global GDP, while the G7 share has fallen to 30%. So basically, you can see where these two lines converge. The blue one are the GDP of the G7. The red one are the BRICs, and they basically converged about a year and a half ago, if you can see that from this chart. So they're expected to contribute over 50% of global GDP by 2030. So this reflects a transformation in the global economy, with the center of gravity gradually moving away from traditional Western powers into emerging markets. So this shift is driven by rapid change in industrialization, urbanization, growing middle class, growing populations, and advancements in technology. So the BRICs bank challenging Western dominance. So how are they challenging Western dominance? So the BRICs account for 42% of the world's population, but they have less than 15% of voting rights in the IMF and the World Bank. So what this does is it challenges the dominance of the West as it counters the dominance of the IMF and the World Bank, because for those of you that don't understand, the IMF stands for International Monetary Fund. I'm more old school. I follow a lot of people that call the IMF the International Mafia Fund because basically what it is, it's making loans that a lot of countries can't pay back. And what countries used to do through arms, through wars and fighting, they now do through finance, okay? So if you think of like the bailout of Greece, why did everyone in Greece start speaking German, right? Because they got bailed out in euros and they wanted to move abroad, and they need to go where the economics are stronger, right? So it's a big brain drain. So this is basically the West's dominance when it comes to money. So what they created was the New Development Bank, so the NDB. This was established in 2014 by the BRICs and to address the infrastructure and sustainable development financing gap in emerging economies. So the governance structure of the IMF and World Bank is heavily influenced by the economic and political power of the West. This is why you can't just look at military, even though it all boils down to military. A lot of this stuff today is done with financial means. You'll see this later in the presentation. So if we look at the US dollar, it begins its dominance in 1944. Why is that? I've talked about this on the channel before. We explained Bretton Woods. Basically, after World War II, Bretton Woods was a global monetary system with fixed exchange rates, anchored and pegged to the dollar. This is when the dollar was still pegged to gold. As you can see in the chart to the right here, you have gold as the base layer, pegged at $35 an ounce. You have the US dollar attached to it, and then you have the British pound, German mark, French franc. It's all pegged to the US dollar at par value. So this led to the creation of the IMF to ensure stability, and the World Bank to fund post-war reconstruction and development projects. This system actually, I don't want to say it collapsed, maybe that's an oversight of my editing, but basically Nixon suspended the gold standard in 1971. And if you want to see an interesting site full of interesting charts, go to WTF happened in 1971. That's when we decoupled the dollar from the gold standard and it became fiat currency. So what is backing, or what is the benefits of being the global reserve currency right now, which the United States is? So the US dollar is supported by trust in the US economy, political stability, and strong financial institutions. I have a couple other things to add with tweets, which you'll see most likely in a slide or two here. But this basically allows the US to borrow at lower interest rates, reducing the cost of financing public debt, in supporting government spending. This also gives the U.S. more control over international trade and finance, strengthening its geopolitical authority. Again, what countries used to do through arms, they do through finance. Why would a manufacturer, let's say, for example, in Colombia, borrow in the local currency at 7 or 8% interest rates when they can borrow in dollars at a much cheaper rate, right? It just makes business sense. So the United States' biggest export is inflation in dollars, okay? If you know, you know. So the dominant petrodollar and emerging challenges. So the agreement between the U.S. and Saudis in the 70s to price oil exclusively in dollars, this is what we call the petrodollar. If you don't know what the petrodollar is, you truly don't understand how the world works. You don't understand the wars of the last 30, 40 years. You don't understand finance. I'm not saying that to be mean. It's just you'd have to be naive to think that everything is priced the way it is and the dollar's strength is based on everything it is, just based on the economy. That's not true. It's because we've had a monopoly on oil, essentially. So this petrodollar system ensured a consistent demand for U.S. dollars as countries needed to hold dollars to purchase oil. If you look at any other country that tried to get off the petrodollar standard, you can see what happened to them. Libya is one of them. So, but things are changing. There are no issues with discussing how we settle our trade agreements. This is what the Saudi finance minister said. But these are my tweets. I've been plugged into finance and geopolitics since I was like 19 years old. Okay, I'm 36 now. I'm about to be 36. So these are my tweets from 2021. The U.S. dollar is backed by the military, the petrodollar system, and international demand. Don't at me, bro. April 21, even though I've been saying this since I was 19. And then also, this came out right here, January 17th of 23, before everyone was making these videos. Saudi Arabia says they're open to settling trade in currencies other than the U.S. dollar. And I tweeted the petrodollar right now, and it's that famous gif of Key and Peele sweating pretty profusely. So what is going on right now? So the rise of the rivals, the U.S. dollar's uncertain future. So the U.S. dollar has historically dominated the global financial system due to Bretton Woods. The U.S. dollar makes up approximately 59% of global foreign exchange reserves. This highlights its significant role in the world economy. So what now? So the U.S. dollar's dominance may be challenged as emerging countries get more powerful, leading to increased competition among reserve currencies. So let's take a look at some ongoing trends. But before that, let's get into today's sponsor, Policygenius. If you have a family, you know how much your loved ones depend on you. In a worst-case scenario, you wouldn't want them to worry about money. A good life insurance plan can give you peace of mind that if something happens to you, your family will have a safety net to cover mortgage payments, college costs, or other expenses so they can get back on their feet and focus on what's most important. My wife and I personally used Policygenius to find the right term insurance for ourselves and our family after our daughter was born. Policygenius was built to modernize the life insurance industry. Their technology makes it easy to compare life insurance quotes from America's top insurers in just a few clicks to find your lowest price. With Policygenius, you can find life insurance policies that start at just $25 per month for $1 million of coverage. Some options offer coverage in as little as a week and avoid unnecessary medical exams. Their licensed agents work for you, not the insurance companies. That means they don't have an incentive to recommend one insurer over another, so you can trust their guidance. There are no added fees and your personal details are private. No wonder they have thousands of 5-star reviews on Google and Trustpilot. Your loved ones deserve a financial safety net. You deserve a smarter way to find and buy it. Head to policygenius.com/whiteboardfinance or click on the link in the description to get your free life insurance quotes and see how much you could save. Okay, thank you for sitting through that. It helps fund the production of this channel. So ongoing trends. So in response to economic sanctions and the invasion of Ukraine, Russia and China have strengthened their partnership to reduce reliance on the U.S. dollar. Since the invasion, ruble-yuan trade has increased 80x. So you can see in this chart right here, it's pretty much flat. And then starting in basically April, you can see how much it's skyrocketed after that. So what does this mean? You can also see that the Russia's National Wealth Fund has switched primarily from holding U.S. dollars and euros to gold and Chinese yuan. So sorry for the smaller image here. I wish I could zoom in, but I can't based on the format of the slide. But basically you can see here the x-axis is 08 all the way to 2023. The y-axis is billions of dollars. So you can see here, US dollar is white, or the ruble. This is kind of hard to explain because it's showing that the ruble is white and the US dollar is white. So I'm not sure what that means for this area right here. But you can see what clearly is magenta or purple, depending on the color of your screen. You can see right here, and basically halfway through 2021, that's when they started adopting Yuan and more gold right around here. Okay, so they're basically dumping the dollar and adding more gold and Yuan here. So the ongoing trends continued. We can see over the past 20 years, the share of dollars in global central bank reserves has dropped from roughly 70% to less than 60%. So again, this just goes back to the talking points of the monopoly that we've had. But you can see here, it was actually very low in the early 90s. You can see it was almost 50%. This is US dollar and Chinese renminbi as a percent of total global foreign reserves. You can see that it was almost at its peak in the early 2000s, the 70-something percent mark that we're referencing. And then it goes all the way down to 2021. We're seeing it closer to 60%. If you look at December 16th through September 2022, you can see it go from, the source is Bloomberg, IMF, U.S. Global Investors. You can see it going from just above 1% all the way up to almost 3% right here. And then you can see the currency composition. This is non-traditional currencies have played a larger role in global foreign exchange reserves in recent years. It goes from 70% to roughly 59%, which we talked about in the slide. The euro has roughly been flat at 21% or so. And then you can see the red line, other, is starting to creep up steadily over time. So over time is the key in this entire video, you guys. A lot of other YouTubers are making this out to be something like, oh, this is going to happen tomorrow, right? I've been following this for 20 years almost, okay? This is something that will happen over the course of decades. As you look at the decline of empires, I truly believe we're in late-stage empire in the United States, but that's just my opinion. Once you see other emerging empires taking over, there's always a crossover and transitions. So when you had Spanish Empire, Dutch Empire, British Empire, American Empire, there's always a transition period, right? After that, ours was pretty much after World War II, okay? And by us, I mean United States. So then you see the decline of the British Empire, rise of the American Empire. I think we're starting to see decline of American Empire, rise of Chinese Empire, but that's just my opinion. I'm American. I was born here, but I'm just speaking on what I'm observing. So if we go back to this, you can see the emerging economies increase gold purchases to hedge against currency risks. You can see central banks shift to net gold buying after financial crises. Russia and China are the top U.S. rivals, led to gold buying to diversify reserves and reduce dollar reliance. So you can see basically here in the 90s, to 2008, central banks sold gold during the late 90s and generally good macro conditions and prolonged dip in gold prices. You can see after 2008, after the great financial crisis, you can see how it's net purchases. So green, net sales, gold, net purchases. So China-Brazil strike deal to ditch dollar for trade. This was March 29th, 2023. Brazil and Argentina discussed creation of common currency. The United Arab Emirates and India are in talks to use rupees to trade non-oil commodities and shift away from U.S. dollars. So this is the big one. This is what a lot of people are talking about. Most people talking about this learned about the petrodollar 2 weeks ago, okay? They're not subject matter experts for the most part. Be very careful who you get this information from. A lot of sensationalism, a lot of doom and gloom. Again, this is something, in my opinion, that will take decades to happen, not literally overnight. But you got to ride the clickbait waves of YouTube to get views, right? So anyway, China and Saudi Arabia enters a historic new phase of relations. So Saudi Arabia signs agreement with Huawei on cloud computing and building high-tech complexes in Saudi cities. These are 34 deals worth $30 billion, okay? So Saudi Arabia is in active talks with Beijing to price some of its oil and sales in China in Yuan. This is what the whole video is about. This is all still very early. Again, don't just jump on the headlines. Don't panic. But if this does happen, my biggest fear, I guess, is seeing the S&P 500 become flat for decades, like we saw in Japan, right? So this signifies China and Saudi Arabia's mutual interest in increasing economic ties. So the dollar hangs in the balance. So what's going on? The U.S. dollar faces the risk of losing its reserve currency status as countries like Saudi Arabia consider pricing their exports in other countries. How serious is this? I don't know. At the end of the day, do you think the rest of the world is going to accept a yuan, right, as a global reserve currency? I don't know. I don't think so, but who knows? I mean, China is a net exporter of goods, and a lot of countries, a lot of continents rely on their stuff from China. So, however, this isn't a major immediate risk. 80% of global oil sales are currently in US dollars. So what happens now? So if the countries continue moving away from the dollar as the reserve currency, the U.S. may experience increased inflation, higher living costs, reduced global influence, this is the big one, and strained government finances. So potential market changes if de-dollarization occurs. Do I think this is going to happen tomorrow? Absolutely not. Do I think it will happen over time? Of course. If you follow any cycles or stages of an empire, it's plain as day to see that we are in late stage empire. This is not a controversial point or a controversial topic. De-dollarization could increase the cost of financing U.S. government debt, which we're already seeing. Check out my previous videos of being in a debt spiral. We already can't, we don't have enough receipts to actually pay for the debt spiral that we're in, and it's only going to get worse and worse. So again, my channel is not fear-mongering, but this is just stuff that's happening, you guys. I'm just making you more intelligent investors in the big picture. You need to understand macro, global stuff that's going on in the world, not just, what's going on in your world or your life as you know it. You need to understand the global picture. So increased interest in alternative assets such as gold, Bitcoin, or other currencies such as the euro or yuan. How you can position yourself if you believe this trend will continue. Big caveat here. Again, not doom and gloom, not trying to sell you gold on an 800 number. I'm not trying to sell you a course. I'm not trying to teach you to dig gold in your backyard and put your cash in your drywall at home. I'm just saying if you believe this trend will continue, what can you do? So you can diversify your currency exposure. You can hold a portion of your investments in non-dollar denominated assets, foreign stocks, bonds, currencies, or you can go into alternative assets, considering allocating a part of your portfolio to assets like gold or cryptocurrencies. I don't like the word cryptocurrencies. I should have edited this. I apologize. I only like Bitcoin for this use case. I want to make that very clear before all the Web3 guys saying, oh, well, my token allows you to summon a taxi to the North Pole and drive you. I don't care about that. I'm talking about the hardest form of money ever created, in my personal opinion, and I've been studying money for a very long time, is Bitcoin, okay? And if you don't understand that yet, read these 3 books in order. The Bullish Case for Bitcoin, Inventing Bitcoin, The Bitcoin Standard. That's all you need to read. And then number 3 is focus on inflation-resistant investments. Invest in assets that tend to perform well during periods of inflation, such as real estate, inflation-linked bonds, or stocks in sectors less sensitive to currency fluctuations. So let's get into my thoughts. So my thoughts could be another 30-minute video, right? But I'm trying to make this very, 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 very concise. So my thoughts, this will happen over a long period of time. When the empire starts to crumble, you'll see much more spending on military, which we've been doing forever, but expanding ourselves. Look at what happens to the Roman Empire. Look at what happened to the Ottoman Empire. Look at what happened to the Byzantine Empire. Look at what happened to the Russian Empire. Look at what happened to any of these empires over time. They expand too much, and a lot of their resources go to funding wars overseas, kind of like what's happening right now, okay? So what I'm trying to say is, from a monetary standpoint, I'm diversified completely. I own a little bit of collectibles. I own a little bit of Bitcoin. I own a little bit of stocks. I own a little bit of real estate. I own a little bit of bonds. In my opinion, when you look at parts of the world that don't have retirement accounts or Roth IRAs or 401ks, they don't even know what a Roth IRA is, okay? And what I mean by that is these are parts of the world that have gone through huge currency devaluations and huge currency fluctuations over time. A perfect example is South America. Look at how many countries have had ridiculous inflation in South America. Look at Argentina. Their inflation is up 100%. When you start the meal, your steak may be X. When you end the meal, your steak may cost a different price. That's not an exaggeration. So what do people do in those kinds of parts of the world? They save in real estate. They pay off real estate and they pass it down to their kids. That's how people preserve wealth in those kinds of economies. Since we're in a more, I don't want to say advanced economy, but one with, more stable, I guess you could say, even though some of this could be perceived as a house of cards, but it's perceived to be stable is what I'm trying to say. When we have things like Roth IRAs and 401ks and dividend investing and things like that, yes, you can lean on that for a few decades, right? Now, am I starting to doubt some of my purchases and, $10,000 of SCHD and this and that? Of course, because I'm plugged in all the time. I've been plugged into this stuff for 20 years, you guys, okay? That's an exaggeration, more like 15. But my point is that once you start following all these macro trends going on in the world, it can either lead to like a fork in the road, two paths in the road. Say you're a product of 2008 or the Greek debt crisis or the Cyprus bail-ins or whatever. Someone farted in China, it affects your stock portfolio in North America, right? Let's pretend that's the case. You can either choose to invest in other things where you think you have more control or do have more control. It could be real estate, for example. That's fine. A small business, maybe. That's fine. Lending money, private lending. That's fine. You can do that if you have enough money. Or you can stay the course and look at what the results have been over the past 50, 60, 70 years or so, through a lifetime, if you will. The stock market has only done one thing, up and to the right. Yes, there have been lost decades. Yes, there have been significant drops, 30, 40, 50, 60%. Yes, all those things have happened, but where have we ended up? Up and to the right, okay? Do I think this will continue? I don't know. I don't have a crystal ball. If I told you anything other than that, then unsubscribe from my channel, because then I just become one of these YouTube charlatans trying to sell you something, okay? So this is a real talk, something that a lot of people need to hear. Don't listen to YouTubers. Half of them have no idea what they're talking about, me included. I don't know what I'm doing. I haven't been studying this for 15 years. I haven't been investing my entire life, my entire adult life. Don't listen to me. I'm just a guy on YouTube, right? But if you do find someone who you do like, know, and trust, okay, who has your best interest in hand, then maybe you can, take their viewpoints and use it to shape your investing that way. So my big takeaway is I'm going to continue to dollar cost average because I don't have a crystal ball. However, you need to be cognizant of other things going on in the world. Again, I mentioned a couple of times this video, do I think America is in its infancy or at its late stage empire? I definitely think if it's a bell curve, we're definitely on the right-hand side of the bell curve, for sure. And all you have to do is study stages of an empire throughout history to find out where we are. So is this to scare you? No, because I'm putting my money where my mouth is. I'm still investing every week, and I continue to do so. But you may want to look into other things like real estate and Bitcoin if you truly want to preserve wealth, because we all know what can happen to stocks in a very short period of time. It's not to say that can't happen with real estate. It's not to say that can't happen with Bitcoin. It's not to say that can't happen with gold. But this is a good time to really take a step back, take a magnifying glass to your portfolio, and figure out, what percentage of what asset you really want to own. So as always, I hope this video was helpful. If you liked it, share it, give it a like, share the videos, distribute it on social media, send it to a friend who needs to hear this, okay? Thank you so much for watching, and have a prosperous day.